So I gave it some thought. That's how I feel when I see all those outflows. It must be like losing every game, like in the NFL. And if you lose all of your games, or even just most of them, the teacher is fired. I believe that the losses are very bad for culture and spirit. There might be other problems. That's not clear, but it's not hard to connect the dots. Things look bad everywhere. Even if it's a business, if profit keep going down quarter after quarter, the CEO will be fired. So the U.S. Securities and Exchange Commission (SEC) was shocked by cryptocurrency. Bloomberg reported on Monday that the Securities and Exchange Commission (SEC) asked aspiring Ethereum exchange-traded fund exchanges to update their filings before the May 23rd deadline. This was a huge change from months ago, when the SEC pretty much ignored the applications. Also, people who want to issue S1s need to get their applications accepted before the launch, which could take a very long time. Eric and Laura Shin from Unchained talked with crypto enthusiast and Bitwise CIO Matt Hugin on Tuesday. Bitwise has applied to the SEC for a spot Ethereum ETF. The three people talk about the SEC's sudden changes of heart and the political reasons behind them. When the former president spoke to fans of crypto earlier this month, it wasn't a secret that the crypto industry had become a major campaign issue for him. Donald Trump told people who like crypto to vote for him in November and said that President Joe Biden didn't know much about crypto. Trump said that his team will accept donations in cryptocurrency. A few days later, Chris Giancarlo, who used to be head of the CFTC, called Trump America's first crypto president and said he had shaped the Bitcoin business. Hugin says that big Wall Street players are becoming more interested in the cryptocurrency business and putting pressure on regulators to make it legal in the U.S. This is in addition to Trump's support. We're showing you clips from the very smart conversation. Turn on post notifications and like the movie if you want to see more like it. Is it feeling shocked or amazed by the number? To be honest, some of them overlapped when I added them all up, but let's say it was around 700. You get bigger if you have grayscale, but I don't really count them because they've been around for a while. As you know, babies almost never have anyone in the first 13 days. I've seen everyone. You're better than most people if you have two. I also look at all of the events in January 20th, 24, and 25. That group is the January 20th, 24, and 24, and 25 class. And it was some number between 0 and 3. And the bid I did was 414, right? I believe it was more than 100. It looked almost like a fake because of where the numbers were. That's one number. Two, I think it was a pretty good cross-section of people. There are investment advisors, and a lot of them are from the Midwest, like Minnesota, Kansas City, and Pittsburgh. And if you look at their websites, they seem like normal people. And that's kind of the big deal, right? Not that the community doesn't care about that, but you know what I mean? If you look at their website, it's clear that they're a small, professional, client-focused RIA in the city, right? They don't want to and aren't glued to their computers. Not everyone is on board with this. So that's the kind of person who can help us get the RIA and advisor market engaged. So even though those sample sizes are small, they're interesting for building a good future. That's because if you can get in RIA with $10 million in Kansas, that's a good size, especially early on when hedge funds were probably doing some arbitrage. They also know a lot about ETFs. I'm not one of them. There were a few more hedge funds than I thought would be there, but they were mostly hedge funds. I also didn't think Wisconsin would have a pension show up so fast. Most of the time they take longer to bite, but some of these ETFs are liquid enough to actually check the institutional box for liquidity. I find it amazing how much came in the first season of 13F. As you look further ahead, you can see that there are now over 1,000 holders. I was shocked by the end of the next one. When I woke up this morning, I was like, really? I didn't really see that happening. I don't know if shocked is the right word, but I wasn't looking for it. So I gave it some thought. Seeing all those outflows makes me think they must be losing game after game, like in the NFL, where the boss gets fired if they lose all or most of their games. I believe that the losses are very bad for culture and spirit. There might be other problems. I'm not sure, but it's not hard to connect all the dots. Things look bad to you. Even if it's a business, the earnings are just not impressive. The CEO will be fired every 3 months. So who chose the 1.5% fee? Was it him? Did he tell you not to worry, everything will be okay, and a lot of money went out, or was he told to do it? They just needed someone to blame. I don't know what that story is about. All of this was set up last year, they say. I find that hard to believe because, I say things to make it go away and make it easier. It was 60 to 38 in favor, though, and the SEC staff was fired. The original goal of Accounting Bulletin 121, which came out on May 16, 2024, was to make companies that hold digital assets for customers follow strict rules for accounting and telling customers about them. The CC's rules were meant to protect investors and keep the market honest by making it easier to understand and better manage risk in the crypto business. But when SAB 121 was made official, a lot of people in the crypto industry thought it was too much of an overreach by the SEC. They said it put too many limits on businesses and could stop new ideas from coming up. People still don't agree on how much regulation the crypto business should have, as shown by the decision to get rid of SAB 121. This move by the Senate shows that they know too many rules can be bad and are working together to make rules more fair. It's a big step forward for the crypto business as it tries to find rules that protect investors without stopping new ideas. It's still not clear if the move was made for financial or political reasons, but the cryptocurrency business is very happy about it. Let us go back to the talk. Start moving, right? That might be a better word. Start this process. I don't know what was really so bad in late 2023 because they were making a lot of money. What the SEC said was already known. They had just beaten the SEC. They were about to get these are good times. I don't understand it. But, it's possible. That's not true at all. Yes? That's something that could be said sometimes. Because if you don't, I think it takes attention away from what's wrong in the losses, which they probably don't want any attention on. That could be true. Since I don't know why, but does it really make sense? They looked at things last year when everything seemed to be going well. Here's what I think about them in general. I don't think they are ETF Paradigm locals. That's why they probably thought 1.5% was about right. Because it's cheap to go abroad. We're pretty much in the middle, right? As a hedge fund, 1.5% is pretty good. That's not a bad fee, but it's 20 to 30 bips on the US ETF market. That's why I call it the Terradome. It is a unique spot. I don't think they thought it would be that tough. All of a sudden, they show up. I thought they'd be normal or maybe a little below average, but still in the bell curve. Now they're way out here. I believe that was a surprise. And I think the effects of that were probably very bad and too much for them to handle. It looks like they still have a lot of money, about $18 billion. That ETF is still making them a lot of money. But $17 billion is leaving the country, which is the most ever. It's just, again, like we talk about records. This is a crazy amount of money in just 4 months, let alone 8 years. So because if you get 1% of, say, $1 billion, that's a certain amount of money coming in. If you get 1% of $10 billion, that's 10 times as much money coming in, right? That's not true. Do you really need 10 times as much money to run the same fund? There are times when you should lower the fee and give that money to someone else, which is what Vanguard did, and it killed everyone. Had they missed out on economies of scale as they grew, they were already 80 bips when they changed. They may have cut to 60 seconds or something. However, if you're used to making 2% on $40 billion, $30 billion, or anywhere else, if you raise the price to 20 bips, your whole business will fail. Because that 2% is how you normally run your business. I feel like it's too late or something. Think about that. I don't know if you can go from 2% to 25%. In other words, it's too harsh. Okay, I get it. You mean they should have planned for an advance and cut costs as they went? Okay. They're not the only ones. A lot of people who work in the fund business have this happen.